John, one of the most enduring features of this current M&A environment is the high level of cross-sector deals, which are about 1/3 of overall deal flows these days. What are you seeing in terms of some of the key best practices as investors face potentially a new sector?
When you think about what's driving those opportunities, companies are looking for capabilities or positions in the value chain that they don't currently have. And so they're stretching outside their core to those things that they think will bring greater value to their customers, a greater position them competitively in the marketplace. So some of the best practices, Kurt, I'm seeing are those who recognize that they know less about what they're buying than what they currently own, and they're trying to look at it differently and say, how can I understand it? How can I make sure the value that I think is there is actually there? Analytics is one of the key tools I'm seeing come into how cross-sector deals are being done and revealing things that even the acquired company didn't perceive as possible with their own business.
So John, what I'm hearing is, first of all, the investor needs an awareness, a heightened awareness in terms of what they're facing. And then second, the good news is there are new tools in order to be able to assess those kinds of opportunities.
The richness of data available today, as you're assessing a business and looking to acquire a company, especially when you're going into a different industry than your core business, the information that's available both from that target company, but out in the overall, I'll call it data sphere of information, is very rich. How do you pull that together to draw a point of view and conclusion? That's where the real insight. Tools are a great way to start accumulating, but the insights around how does that play into the business case? What are my growth opportunities? What are the cash flows? And where's the value come in? That's where I'm seeing the analytics really develop a more rich view and frankly create better competitive positioning.
What are you seeing as some of the drivers behind a relatively high level of valuations in the current market, and what are companies doing about it?
I don't think the market is overvalued. I mean, there's a lot of opportunity and growth potential in the future earnings of these businesses. So I don't see valuations abating, but I see that as creating the challenge for many decisions around how to invest and deploy capital today. What a company's worth and what you pay are different things, but companies are really getting focused on what it's worth to them and how they're going to achieve that value, both in taking the business into their own portfolio, adding to how they play in the value chain, and then developing those core integration and synergy opportunities quicker and more clearly earlier in a deal process.
We hear a lot about the $1 trillion overhang with respect to PE dry powder and the other availability of capital in the market overall. How do you see that playing out over the next couple of years?
I look at this as a period of prudent opportunity. I sat down with a bunch of executives a couple months ago, and they said, just because I have capital doesn't mean I change my strategy. It makes me focus on what's my strategy and how do I execute it, and what capital do I have available. And it might change some of the decisions around what you fund when, but you can't take your sights off the fact that you have to generate the returns on those investments.
What are you seeing as some of the key implications of the tariff and potential trade war on the M&A environment and in investors in general?
Well, scenario planning is my two-word answer to that question. As you look at the environment around tariffs in particular, it creates the question, well, where is the economic incentive to participate? And where and how will I participate, and which customers am I trying to reach? But that ability to look at your business very quickly, understand where your capital is flowing, your goods are flowing, where your trading options are, and frankly, what are your other ways to reach those customers? Whether it's investing directly in a business, whether it's alliances and partnering with others to reach those markets. So there's a lot of alternatives available. And Kurt, a lot of the initial impacts when you talk about tariffs and trade barriers tends to affect the manufacturing process before it affects the consumer. But ultimately, it does come back to the consumer.
John, clearly the antitrust decision will have an impact on the entertainment and media industry. What, in your view, John, are some of the implications that the AT&T Time Warner decision will have on the broader M&A market?
Certainly, it helps companies envision more creative opportunities. It reminds us that we can grow and enhance the value and the competitive position that we have with our customers in very close or similar industries. Some industries, such as retail, it's already very competitive. The way a consumer gets their products and interacts with the large consumer companies has been disintermediated by things such as e-commerce, direct-to-consumer, as well as the fundamental role of retail in the channel. But you've seen a lot of consolidation in the specialty segments in retail, and you see that the marketplaces are getting larger and the number of marketplaces is getting smaller. I think what you're seeing is that companies recognize that being competitive means working in both the depth at which they operate in their own industry, but bringing additional value they might find from other industries.
John, pulling out your crystal ball then, how do you see the overall M&A environment evolving for the rest of 2018 and into 2019?
I see 2018 finishing as strong as it started. We're going to continue to see portfolio reshaping, so there will be divestitures on the market and assets available. We're still going to be constrained by the availability of quality businesses to be acquired, but I have no doubt that that capital is going to get put to work. I also think we're going to continue to see more big deals. We've seen more large deals, we call them mega deals, in the first half of this year. I think we'll continue to see those. But with those comes the requirement to drive return. And so that comes back to, how do I take this opportunity, whether I'm bringing two adjacent industries together, think about retail and healthcare, think about how we interact with our consumers, but then how do I drive the returns on that? It comes back to what you do with it, not just what you pay for it.